Now, Mark Wahlberg and Jeff Bezos both recently moved their state of residence to a new state for state income tax. Mark Wahlberg, the classic example of California to Nevada, his was about income taxes. Jeff Bezos moved from Washington, a state that has no state income tax, to Florida. But why did he go there? It was about capital gains tax and estate tax. I'm gonna break these two situations down so you know in your scenario whether you can save on state income tax by moving. A lot of people think about it, and they see their state income tax bill and they're like, man, I could live in another state that has no state income tax. How does that work? That's gonna break down in today's video. I'm Matt Sorensen, let's build wealth. All right, let's break down Mark Wahlberg here. His is the classic example of something moving from a high income state tax like California to a no income state like Nevada. He went from a 13.3% to a 0% state income tax. Now, in order to get those tax savings, what you have to do is what Mark did. You have to physically move, but also have to earn your income in the no income state tax, like Nevada. So for example, Mark Wahlberg couldn't move to Las Vegas and then go back to Hollywood to shoot his videos and say, no state income tax. That wouldn't work. You have to also earn the income in a state where there's no state income tax. So what did he do? He moved his production company to the state of Nevada. Now I'm sure he's got income still in California and some other states that do have a state income tax, and that's okay. He'll pay it there. For example, if he has Municipal, his clothing company, and they make sales in New York or Illinois, he has to apportion state income tax to those states, but he doesn't pay anything in Nevada. And I want to break down how state income tax works. So I want you to think about this for you if you're a business owner, you got an e-commerce store, whatever it may be. How do I minimize my state income tax? Well, you need to know those two things. You need to live in a state with no state income tax, and you need to earn the income in a state with no state income tax. So let's break down how that works. If Mark Wahlberg lives in California, every penny he makes in California is at 13.3%. But what if he's making money in Nevada that has zero state income tax? What does he pay in California? Still 13.3%. The state of California doesn't care. They're still gonna charge him the max rate, and the state of Nevada got nothing, but California cleaned up. Now, what if he made money in a state that does have state income tax, like Arizona, and he had to pay Arizona's 2.5? Because Arizona says, hey, if you make money here in our state, we don't care where you live here, you live in another state, you're paying us 2.5% regardless. But what California does, and all states do this, is they give you a credit when you are a resident of their state and you paid state income tax to another state where you earned the income. So he gets to reduce his rate effectively here, 2.5%. So he's really only paying 10.8% in the state of California because he got a credit for what he paid in Arizona. So as you can see here, if you want to get out of state income tax, you have to leave the state. Because California, or frankly every state, says, I don't care where you made the money, you're paying us the maximum rate, and we only credit you if you paid another state income tax already. Now let's look at what happens when he lives in Nevada, which is where he's at now. He's got his production company in Nevada, he's earning income there, and he's a resident of the state. He is getting the 0% state income tax because he lives in the state of Nevada and he's earning income in the state of Nevada. Now let's say he goes to Arizona, who does have a 2.5% state income tax. He will pay 2.5% in the state of Arizona. Now when he goes to try and get a credit in Nevada, Nevada's like, you don't pay any tax here, so there's no credit to give. Now if he was earning this income in California, let's see he was still going back to Hollywood, he's making money there. California's like, great, thanks for coming to our state. You still owe us 13.3%. So he's not gonna get out of that from California if he's still earning the income there. But he is getting out of it for the income he's making in Nevada and also the income he has in other states. I mean, he's got Wahlburgers, he's got Municipal, he's got all these other businesses, not just his movie and production company, that make money in other states. And he can pay those states lower rates like Arizona and not get suckered into the whole 13.3% like he does in California, even for the income he doesn't even make in California. So even on the out-of-state income he has outside of Nevada, there are tax savings to be had. And that's how it works for any small business owner or a person who can move their business. Maybe it's an online business, or you just have income across multiple states and you want to get out of California because California charges you the max rate on all of your state income, no matter what state it is made in. Now, Bezos' situation is totally different than Wahlberg's. Bezos moved from the state of Washington to the state of Florida. Now, why did he move? Washington has a 0% state income tax. Bezos isn't in a situation where he needs to worry about state income tax. How does Bezos make his money? He sells his Amazon stock, which is a capital gain. And spoiler alert, Washington has a 7% capital gains rate on gains over $250,000. Now this is gonna hit Bezos. What also does Washington have? They have an estate tax of 20% once you have over about $2.2 million in an estate and pass on. What does Bezos need to worry about now? Selling his Amazon stock where all of his wealth is, and about when he's gonna die one day, because the guy is getting old. So for him, moving to Florida, he goes to a state that also has no state income tax, no capital gains tax, and no state estate tax. So he's avoiding the state capital gains tax that Washington has, and he's avoiding their estate tax. Now, Washington's a great place to earn and make money, but it's a terrible place to build wealth, because when you sell assets later in life, you have to pay this capital gains rate of 7% over $250,000 of gains, and you have a ridiculous state estate tax. There's not many states that even have a state estate tax. Most states don't even have this. The handful of states that have them, they just grab whatever money's there. Now, despite all the reasons that Bezos gave publicly about why he moved, that is really why he moved from the state of Washington to the state of Florida. It's hundreds of millions, if not billions of dollars in savings in state taxes. Now, saving on taxes is just one piece of the wealth building puzzle that I cover on my channel every week. So please make sure you're subscribed. I'm covering topics on saving taxes, on building your retirement account, investing in assets you know, investing in real estate, starting a small business, protecting your assets, all those topics I'm covering here on my channel. I'm Matt Sorensen. We'll see you next time.